Money management is a crucial aspect of successful crypto trading, encompassing strategies to effectively manage capital and minimize risk. One fundamental principle of money management is to only risk a small percentage of your trading capital on any single trade. This helps to protect against significant losses and ensures that you have enough capital to continue trading even after a series of losing trades. A common rule of thumb is to risk no more than 1-2 of your trading capital on any single trade. Another important concept is the risk-to-reward ratio, which involves assessing the potential reward of a trade relative to the risk undertaken. A favorable risk-to-reward ratio typically involves seeking trades where the potential reward outweighs the risk by a significant margin. For example, a risk-to-reward ratio of 1-3 means that for every dollar risked, the trader aims to make $3 in profit. By adhering to a positive risk-to-reward ratio, traders can ensure that their winning trades compensate for their losing trades, leading to overall profitability. Trade management involves implementing strategies to manage trades effectively once they are open. This includes setting stop-loss orders to limit potential losses and take profit orders to secure profits at predefined levels. Stop-loss orders are placed below the entry price for long positions and above the entry price for short positions to mitigate losses if the market moves against the trade. Take profit orders, on the other hand, are placed above the entry price for long positions and below the entry price for short positions to lock in profits when the market moves in favor of the trade. Traders should also consider using trailing stop-loss orders, which automatically adjust as the price moves in the trader's favor, allowing them to secure profits while giving the trade room to breathe. It's essential for traders to stick to their predefined risk management and trade management rules, regardless of market conditions or emotions. Emotions such as fear and greed can cloud judgment and lead to impulsive decisions, which can result in significant losses. Consistency and discipline are key to successful money management and trade management in crypto trading. Traders should regularly review their trading performance and adjust their strategies as needed to adapt to changing market conditions. By prioritizing capital preservation and employing sound risk management practices, traders can increase their chances of long-term success in the crypto markets. Continuous learning and refinement of money management and trade management techniques are essential for traders to evolve and improve their skills over time. With a disciplined approach to money management, risk and reward assessment, and trade management, traders can navigate the volatile crypto markets with confidence and achieve their financial goals.